Hi there, and welcome back to Quantum Wallet. I'm Den, your trusted guide for navigating the world of investments. If you're looking to build a portfolio that not only grows over time but also pays you consistently, you're in the right place. Today, we're diving into the best dividend stocks to buy in 2025. Dividend stocks are a fantastic way to generate passive income while benefiting from long-term growth. And this year's market trends are shaping up to offer some exciting opportunities. In this video, I'll share my top picks for high-yield dividend stocks that combine strong payouts with solid financial health. These are stocks that not only offer attractive yields, but are also backed by companies with a proven track record of stability and growth. Whether you're a seasoned investor or just getting started, this list is designed to help you make informed decisions for 2025. So, stick around until the end, because I'll also share some pro tips to maximize your returns and avoid common pitfalls when investing in dividend stocks. Ready to take your portfolio to the next level? Let's get started. What are dividend stocks? Before we dive into the stock picks, let's quickly cover the basics. What exactly are dividend stocks, and why should you consider them? Dividend stocks are shares of companies that pay out a portion of their profits to shareholders on a regular basis. These payments, known as dividends, are typically distributed quarterly and can provide a steady income stream. Now, what makes dividend stocks particularly appealing is their dual benefit. Not only do you earn consistent payouts, but you also have the potential for the stock's value to grow over time. This combination makes them a favorite for investors looking to balance income with long-term wealth building. But not all dividend stocks are created equal. Some companies offer sky-high yields that might seem tempting, but can be unsustainable. Others prioritize growth, offering lower yields but more reliable payouts. The key is to find that sweet spot. Stocks with a healthy dividend yield supported by strong financial fundamentals. High-yield dividend stocks, the focus of today's video, typically offer yields of 3% to 6%. These are especially attractive in a market where interest rates and inflation can erode the value of cash holdings. So, whether you're saving for retirement, looking for passive income, or just want to diversify your portfolio, dividend stocks can be a game changer. And in 2025, there are some incredible opportunities on the horizon. Now that we've set the stage, let's talk about how to identify the best dividend stocks and what criteria you should be using to evaluate them. Key criteria for selecting dividend stocks. All right, now that we understand the basics of dividend stocks, let's talk about how to identify the best ones for your portfolio. Not all dividend stocks are worth your investment, and choosing wisely can make all the difference in maximizing returns while minimizing risk. So, what exactly should you look for? Here are the key criteria to consider. First up, dividend yield. This is the annual dividend payment expressed as a percentage of the stock's current price. While high yields might seem attractive, they're not always sustainable. Ideally, you want a yield in the range of 3% to 6%, high enough to provide meaningful income but low enough to suggest the company isn't overextending itself. Next, the payout ratio. This tells you what percentage of the company's earnings are being paid out as dividends. A payout ratio under 70% is generally considered healthy, as it leaves room for the company to reinvest in growth or weather economic downturns. If the ratio is too high, it could signal trouble if earnings take a hit. Then, look at earnings growth and stability. A company's ability to consistently grow its earnings is a strong indicator of its capacity to sustain and even increase its dividends. Focus on companies with a history of stable or rising earnings over the years. Another critical factor is the company's debt-to-equity ratio. High levels of debt can be a red flag, as it may indicate the company is over-leveraged and at risk of cutting dividends during tough times. You want companies with manageable debt levels and strong cash flow. Speaking of cash flow, always evaluate the free cash flow. This is the cash a company has left after covering its operating expenses and capital expenditures. A robust free cash flow ensures the company can maintain dividends even during periods of slower revenue growth. Now, let's not forget about dividend growth history. A company with a track record of consistently increasing its dividends shows commitment to its shareholders and financial health. Look for companies that have raised their dividends for at least 5 to 10 consecutive years. Lastly, consider economic and sector trends. Certain sectors like utilities, healthcare, and real estate investment trusts, or REITs, are known for their reliable dividends. In 2025, with inflation and interest rates in play, these sectors are likely to remain strong contenders. By focusing on these criteria, you'll be better equipped to identify high-yield dividend stocks that are not just paying well today, but are also positioned for long-term success. Now that you know what to look for, let's move on to the exciting part: my top dividend stock picks for 2025. Top dividend stocks for 2025. Now let's delve into some top dividend stock picks for 2025. These selections are based on current market analysis, focusing on companies with strong financials, sustainable dividend yields, and promising growth prospects. Here are my top 3 picks. Stock number 1, Kinder Morgan Inc., NYSE, KMI. Kinder Morgan is one of the largest energy infrastructure companies in North America, operating approximately 50,000 miles of pipelines and 139 storage terminals. The company handles about 40% of U.S. natural gas consumption and export volumes, positioning it strategically within the energy sector. Dividend yield. As of early 2025, Kinder Morgan offers an annualized dividend yield of approximately 4.2%. Financial health. The company has demonstrated robust financial performance, with management projecting an 8% earnings growth for 2025, increasing EPS from 1.17 to 1.27. Additionally, Kinder Morgan plans to reduce its net debt to EBITDA ratio to 3.8 by the end of 2025, indicating a commitment to strengthening its balance sheet. Growth potential. With the rising demand for natural gas, Kinder Morgan's extensive infrastructure network positions it well to capitalize on this trend, potentially enhancing future dividend payouts. Stock number 2, Pfizer Inc., NYSE, PFE. Pfizer is a leading pharmaceutical company with a diverse portfolio of healthcare products and a strong pipeline of new drugs. Dividend yield. Pfizer offers a dividend yield of over 6%, making it an attractive option for income-focused investors. Barron's. Financial health. The company maintains a solid financial position, with consistent revenue streams from its wide range of pharmaceutical products. Growth potential. Pfizer's ongoing research and development efforts, along with strategic acquisitions, are expected to drive future growth and support sustained dividend payments. Stock number 3, AT&T Inc., NYSE, T. AT&T is a major telecommunications company offering a broad spectrum of services, including wireless communications, broadband, and entertainment. Dividend yield. AT&T provides a dividend yield of approximately 6%, appealing to investors seeking high-yield income. Financial health. Despite facing challenges in recent years, AT&T has been focusing on debt reduction and streamlining its operations to improve financial stability. Growth potential. With the expansion of 5G technology and a focus on core business segments, AT&T is positioned to enhance its market share and financial performance, supporting its dividend strategy. Honorable mentions: Brookfield Infrastructure Partners, NYSE, BIP, a global infrastructure company with a strong dividend yield and solid financials, making it a noteworthy consideration for dividend investors. The Motley Fool. Realty Income Corporation, NYSE, O. Known for its monthly dividend payments and a track record of dividend increases, Realty Income remains a popular choice among income-focused investors. NASDAQ. When considering these stocks, it's essential to conduct your own research and assess how they fit into your overall investment strategy. Remember, while high dividend yields are attractive, they should be supported by strong financial health and growth prospects to ensure sustainability. Now that we've covered some top dividend stock picks for 2025, let's discuss the potential risks and considerations to keep in mind when investing in dividend stocks. Risks and considerations. Before diving into dividend investing, it's crucial to understand the potential risks and considerations. While dividend stocks can be a reliable source of income, they're not without challenges. Let's break down some key risks. First, dividend cuts. Even companies with a long history of paying dividends can reduce or eliminate them during tough times. This often happens when earnings decline or when a company prioritizes other financial obligations, like paying down debt or funding new projects. Always monitor the payout ratio and the company's financial health to minimize this risk. Next, economic factors. Recessions, rising interest rates, or inflationary pressures can negatively impact dividend-paying companies. For example, companies in sectors like consumer discretionary may struggle during economic downturns, potentially affecting their ability to maintain dividends. Another consideration is overconcentration. Relying too heavily on a single stock or sector for dividends can expose your portfolio to unnecessary risk. Diversify across industries and geographies to protect against sector-specific downturns. Finally, don't overlook tax implications. Dividends are often taxed differently depending on whether they're qualified or non-qualified. Holding dividend stocks in tax-advantaged accounts like IRAs can help maximize your returns. By being aware of these risks and taking steps to mitigate them, you can build a more resilient dividend portfolio. Now let's talk about how to optimize your dividend investing strategy. Pro tips for dividend investors. To get the most out of your dividend investments, here are some pro tips to keep in mind. First, reinvest your dividends. One of the most powerful strategies for building wealth is reinvesting your dividends. Many companies offer dividend reinvestment plans, or DRIPs, which allow you to automatically reinvest your payouts to buy more shares. This harnesses the power of compounding over time. Second, focus on dividend growth. Companies that consistently increase their dividends, even if the yield is moderate, often outperform those with high but stagnant payouts. Look for stocks with a history of annual dividend increases, as this indicates strong financial health and a commitment to shareholders. Third, hold for the long term. Dividend investing is not a get-rich-quick strategy. It's about steady, reliable growth over time. Patience and consistency are key to seeing the benefits of compounding and dividend growth. Fourth, use tax-advantaged accounts. If possible, hold dividend-paying stocks in tax-advantaged accounts like a Roth IRA or 401k. This can shield your earnings from taxes, allowing your investments to grow faster. Finally, stay informed. Regularly review your portfolio to ensure your holdings align with your financial goals. Keep an eye on economic trends, company earnings, and changes in dividend policies to make informed decisions. By following these tips, you'll be well on your way to maximizing the benefits of dividend investing. Now, let's wrap things up with a quick recap and some final thoughts. Let's quickly recap what we've covered today. We started by exploring the basics of dividend stocks and why they're a powerful tool for building wealth. Then, we discussed the key criteria for selecting the best dividend stocks, highlighted some top picks for 2025, and addressed the risks and considerations involved. Finally, I shared some pro tips to help you optimize your dividend investing strategy. Dividend stocks are an excellent way to generate passive income and grow your portfolio over time. But like any investment, they require careful planning and research. Now, I'd love to hear from you. What are your favorite dividend stocks for 2025? Do you have any strategies that have worked well for you? Drop your thoughts in the comments below. If you found this video helpful, don't forget to give it a thumbs up, subscribe to Quantum Wallet, and hit the notification bell so you never miss an update. We've got plenty more expert insights and strategies coming your way. Thanks for watching, and as always, happy investing.